Today, I'm excited to bring us, we took it from 0 to 50 million weekly rides.
But I didn't expect people to be angry at me for not making enough money. And I was like, this is crazy. How much credit do you get as a founder, or do you actually earn yourself? And the short answer is not a lot.
How did you get that money? What was the narrative? What was your process?
That's a good question. So
what would be the kind of parting advice to founders out there that are looking to raise capital?
One thing that I think is pretty universal is
everyone, welcome back to Fundraising Demystified. Today, I'm excited to bring us the former head of China for Uber, who took it from 0 to 50 million weekly rides. Also the founder of Forma, who sold this company to Snap. Welcome to the show, Ben.
Thanks, Jason. Thanks for having me.
No, I'm excited to have you on the show today. Your background is super impressive. And yeah, from what I can understand and what I know about you, you know how to do growth. And I would love for you to share the backstory of your early days at Uber and what you did to basically take it to the scale that it was and ultimately selling that division of Uber for $7 billion.
So Uber, by the time it entered China, it was working in US and I think in Europe at the time already. So there was a little bit less of product market fit issue because we knew that people wanted to order cars through their smartphones. That did not exist in China yet. So I was the first employee for Uber China. Actually, 3 of us started on the same day. And the idea was, can we bring something that seems to work in other markets and bring it to China? At the time, a lot of tech companies that tried to enter China, I think at this point it's well known that most of them did not succeed. And so, of course, there were many doubters for Uber as well. And it was actually 3 years from kind of cradle to the grave there, actually. And the first year, we had a small team working insanely hard and basically nothing was working. We were working 80 hours a week. We were going to bars, handing out flyers, negotiating with taxi and limousine companies and car rental companies to get cars. And at the end of the first year, I think we were still doing something like 100 trips a week. I don't remember exactly how much, but it was just very, very few. And in the second year, we went from 0 to I think 40 million trips a week. And that was crazy. And the wheels were falling off. And then in the third year, I think we were 40 to 50 million. It was pretty much flat. And that's actually kind of what led to our exit of China. So that's kind of it was kind of 3 completely different stories. And I think that kind of encapsulates the idea of when you don't have product market fit, you can try really hard and nothing is working. It wasn't for lack of trying. We tried really, really hard. And then when we found something, it just was a complete spark and then took off.
Sorry? That's such a massive inflection. What was the something?
Yeah. So we knew from the US that Uber X was the big unlock for supply, right? So initially Uber started with Uber Black. It was really nice black cars, town cars and SUVs, and very expensive. And that was working pretty well. And then the huge unlock is when they added Uber X, which was peer-to-peer. So regular people like you and I could drive on Uber, right? And so it was a supply constraint problem for a really long time. There weren't enough drivers. And so when anybody could become a driver, there was just way more supply on the market. And there was a key thing that we always wanted was the 4-minute ETA. It's we could get to somebody within 4 minutes. And that was kind of the sweet spot for a magical experience. So in China, because of regulations, we also started with something like Uber Black, went with rental car companies, limousine companies, and there also was not very much supply. The thing is, we weren't sure how to do the peer-to-peer thing for a very long time. I still remember there was a guy on my team who found this obscure document from the Ministry of Transport. So it was an official Chinese government document that said we recommend ride sharing during the Spring Festival, which is their New Year. Because everybody goes back to their old hometown and there's crazy traffic. So they are suggesting ride sharing, but not for profit. And so he's what if we tried that? What if we said, hey, we recommend nonprofit ride sharing to get around town, beyond just Spring Festival. And so there was this kind of Ministry of Transport document. It was not a law or anything. It was just an opinion, but we did have some a little bit of uh, of a shield. And I still remember like everybody up my chain hated it. And there was a call, and Travis, who was the CEO at the time, was on a call, and he was the only guy who was like, man, this seems kind of interesting. Why don't we try it? And everybody else hated it. And I was in Beijing, and we had 3 other cities. Nobody else wanted to try it. And so we just did an experiment in Beijing, and it just completely took off. And then obviously very quickly we brought it to the other cities, and our competitors eventually copied us
How
as
many
well.
things do you think you tried? Like how many like
Oh, man.
different channels do you think you tried before you had that one big explosion?
Well, I mean, at the end of the first year at that time, maybe we had like 10 or 12 employees full time, probably all working like 80 hours a week. I don't know how you like count distinct different things, but we tried a lot of offline stuff, a lot of online stuff, online ads, offline ads, going through schools, handing out flyers, um, partnering with like BD partnerships with big companies like Samsung or whatever, and like little companies that are just local companies. I don't know. I think we turned over a lot of stones, um, most of which did not move the needle. Um, so yeah, we tried a lot of stuff.
And so out of curiosity, like you're basically doing, venture, you were in finance,
Yeah.
prior to this role. Like,
Yep.
how did you make that leap and get into that position to make such a massive impact?
Um, that's a good question. I think there are a lot of young people who are in VC who are always are like, oh, I want to join a startup and, actually get my hands dirty. Um, and and I think a lot do, right? And so I'm certainly not the only one to have made that transition. There are others who just never make the transition, and that's fine as well. I think one thing that Uber was very good at was they were very good at getting people who are not from startups, who are like smart and motivated and willing to learn. Uber kind of had a system, like Travis had a way to convince smart people to like figure stuff out. And he really, really prioritized problem solvers, and less about experience. Like he famously hated MBAs. I mean, he hired tons of MBAs as well, but like it was just a way of him talking about it to be like, I don't really care what your background and experience is. I care about your willingness to learn and try stuff and keep trying. And I think that was one of his superpowers. We hired so many people from banking, private equity, venture capital, consulting who had no prior operational experience. And to be honest, not everybody worked out, but a lot did. And Travis was willing to give. Travis has a lot of well-documented shortcomings. He has also a lot of strengths. I think also pretty well-documented strengths as well. And one of them was he was always willing to give somebody a chance. Like when I joined Uber, I was pretty junior, right? And on the call, there were like we hired really senior people in China, like a VP from Tencent. He was the GM of Shanghai. I was not even the GM of Beijing yet. I got promoted after we did this test. And so everybody hated it. And they even said it on the call. They're like, this is a terrible idea. And Travis was like, I don't even know if it's a good idea. He wasn't like, I'm going to go bat for Ben, right? He's like, okay, you can do this other thing in Shanghai. You can do this other thing in Guangzhou, and Shenzhen, and we'll see. So I think that type of mentality from the founder was very good. It gave people the courage to speak up and have ideas, even if they are like really junior, or if they're senior too, right? I mean, senior people also had some good ideas, but so I think, yeah, we had a culture of giving people a chance and letting the best idea win, and not be too focused about pedigree or experience. So yeah, I think Travis gets the credit for that.
Well, part of great people and great people executed. So taking that experience from VC land to operating experience at probably one of the highest levels at Uber, what led you to Forma? And for the audience sake, tell them a little bit about what Forma is or was.
Yeah, Forma was an attempt to solve the photorealistic clothing try-on problem, which is a pretty old problem since like Clueless came out in the 90s, and probably before then. Everybody's wanted to try on different clothes virtually. And every couple years, there's a new technology breakthrough, and everybody's like, well, now we can really solve it. And that one for us was deep learning. And deep learning did help a lot, but it actually did not fully solve the problem. So we can actually talk about that later if you're actually interested. But The idea was this is a very big market, really strong need. There was this new technology wave that we were surfing, and we're like, yeah, we can use the new technology to attack this great big market, right? And that was the kind of idea. I mean, spoiler, it's still not solved to this day. So we did not solve it. But your original question was, how do I get there? I was not a born founder. I think there are born founders. I think Travis at Uber is one. There's a lot of famous born founders like Zuck or Bezos or something, where you can't really imagine them working for other people for, or at least for very long. I was not. So I started my first company, I think in my early 30s. I had to take it took me a lot of time to get the confidence and interest. My route was kind of weird. I'm an immigrant child, so I was supposed to go to med school and like settled on engineering. Didn't even occur to me to start a company. So it just took me a little bit longer to like get there. But I think through the Uber experience, I started to build more confidence and realize that like some of these awesome companies that you hear about or see, they are indeed awesome, but there are a lot of things that are like lucky. And I think there are a lot of things that you can do if you are put in those situations. So I was also very lucky to be part of Uber. I was certainly in China from ground zero. And so I built a lot of confidence, like, oh, I can do a lot of this stuff that looks like magic. But if you're spending like 60 hours a week doing something for like months, you can do a lot. So that was one of the things that took me some time to like experience myself. I didn't have that like built-in confidence from like birth or whatever. But through the experience at Uber, I was like, oh, I think I can do it. And I think a really important part is I think I'd enjoy doing it, which I did not know before that.
Well, you ended up raising about 7 million from like Founders Fund, GSR, like, and then you got acquired by Snap. So I know you kind of downplayed what you did at Forma in terms of like you didn't solve the problem, but it sounds like you had an outcome.
Yeah.
Walk us through that journey of like setting the tone for raising money and how you ran that process.
Right. Actually, now I think I realized I misremembered. I think we raised 13 million. We raised 7.5 million in the second round and like five and change in the first. Sorry, that's I forgot about that. So the company, I would say from a financial perspective, was pretty successful. We raised 2 rounds of financing from great investors. We sold the company for over $100 million. It was 3.5 years. So everybody made money, investors, employees. So, it's a pretty happy story, I guess, from that perspective. I would say, though, from a product and technology perspective, we did not solve either. So from my perspective, we more or less failed. And so if I actually take a step back, and my co-founder and I spent a lot of time thinking about like how much credit do you get as a founder, or do you actually like earn yourself? And the short answer is not a lot. There's just like so much luck in building companies. Of course you need to have some level of like effort and intelligence and decision making. But there is so much luck. Like we sold our company 6 months before J-Pow started raising interest rates, which obviously we had no idea, right? Like I have no clue. I would say we should get a little bit of credit in terms of like intuiting that like the value that they were going to buy us for was much higher than what we thought we could raise for, or what our company was worth at the time. So I kind of like had some intuition that this deal was too good to like pass up and like keep going. So I think that's where we get like a tiny little bit of credit, but most of the credit is still like we were in a 0 interest rate environment. Snap stock was sky high, as were a lot of stocks. So timing means a lot. Yeah.
Like I know you again, downplaying what you achieved on the tech side, but you still were able to convince some pretty impressive investors that this was worth making a bet on. And it sounds like everyone came out on top, but how did you get that money? Like you raised 2 rounds.
Yeah.
What was the narrative? What was your process?
That's a good question. So the first round was led by GSR, a firm that I met a long time ago. Back when I was a VC, I was on boards with Richard from GSR. We already really liked each other. He tried to recruit me many times to his companies, to GSR itself, to be a VC again. He was the primary backer of Didi, which was our primary competitor at Uber China.
That's fun.
They tried to coach me many times to leave Uber China to go to Didi, which financially speaking would have been the better move in retrospect, but it's neither here nor there. Anyway, so I had a deep relationship with GSR already. And so they were like, it was kind of a package deal of like me coming in with my co-founders. They were looking for a CEO. They hadn't had a CTO already. And so that was like relatively easy. That was like relationship based, which for better or for worse, a lot of these things are. And then the second round was from Founders Fund. So Scott Nolan was one of my classmates at Bain, which was my first job out of college. And Keith Raboy actually invested in another clothing try-on company, I think a couple of years before ours. And I still remember the pitch to Keith. I was like, well, we don't need, like, even the clothing creation, we were just doing from a single photo. Because I think the last company, they were doing 3D scanning on like all the clothes. And it's like, this is like kills any margin. And we're like, no, we just take a single photo from like an e-commerce site that already exists. And we create it into a clothing try. So he's like, oh man, this is like half the equation just solved. So I still remember that bit. And he's like, and he called his friends Scott, his coworker or whatever, his colleague Scott, who knew me. And so that came together very quickly as well. So in both cases, it happened to be like relationship based, which, yeah, I don't know. I think it's kind of annoying for a lot of people, including myself. But you know, sometimes you do need to have some of these relationships in place. But I would say it was like a lot of stuff was getting funded. We had a very, very strong team, and the market need was like very acute. And commercially speaking, like clothing is a great market to be in. Very lucrative, very high margins, a lot of waste. So it was a good market, strong team, tech wave, great economic conditions. So I would say the degree of difficulty wasn't very, very high for that one. Whereas like in this environment, I mean, depending what you're doing, like it could be much harder to pull something together.
Well, I think the lesson here for our listeners is the idea of just like catch the wave.
Yeah.
You know?
Oh, totally.
Don't fight the wave, catch the wave. And yeah, it doesn't always work out, but it's a lot easier to have an out.
So after our company and my co-founder and I talked about so much about how much credit do we get, and we found out we decided that was not very much. I bought myself and my co-founder both have a giant reprint of Duke Onomoku, who was like the first guy who popularized surfing in Hawaii. It's like I it's literally right next to me. I look at it every single day. It's a giant poster, and he has one right next to his desk. And we're like, you have to be surfing the waves. Like you can build your surfboard all you want, right? And then you can build the best surfboard in the world, and there's just no waves. Like, what are you doing, right? So,
it's so simple,
yeah.
but it's so hard for so many founders to realize that. And I've run into so many founders who get frustrated, like, oh, no one's investing in us. It's like, are you on a wave? Are you catching a wave? Are you like the shiny object, that everyone's chasing? Or are you going against the grain? Are you kind of like building in something? And again, there's all kinds of stories of those ones working out, but there's a lot more stories of people catching the wave and having a successful outcome. I feel like some founders are masochists and love.
Yeah, but you do hear stories about founders who are just like contrarian, and then it all worked out. But like that's pretty hard, right? If you're paddling where nobody's paddling, yeah, a wave could pop up there, right? And you might be a genius and spotted things 10 years in advance, but there's just so much risk, right? And like even if you're right, if you're too early, you're also going to lose money. So and there's a lot of different types of waves, right? There's like fundraising waves, there's like technology waves, there's product waves, or just distribution waves. So there are multiple different waves that you can surf. So you got to have something. You got to have some kind of wind at your back, or whatever the analogy is, some like wave pushing you. And I think another thing also, as a founder myself, I could say it's very hard to chase waves as well as a founder, because the wave might be really short lived, right? So that's another reason to like not just chase waves, because if you just paddle over there and that wave just like kind of like dies, you're like, well, I just like killed myself paddling over here. And then the wave died, and then I'm like gonna have to like paddle over to this other wave, and then that one might die, and then you can kind of be like a dog chasing your tail at some point. So it is pretty hard.
No, that's good. Good kind of check for anyone to kind of be looking at what ways or what target markets they want to pursue. And also, some are so crowded, it's like you're getting knocked out.
Yep. That's a good point. If everybody's there, I don't know. Like, are you going to be able to outsurf everybody. I mean, probably can
Pretty good.
outsource a
That'd
lot
be
of
a pretty
people,
good
but like,
server.
yeah, you better be pretty good.
You're likely having trouble raising money or selling your company. Personally, I've had 4 exits and I've raised over $145 million. If you want a free coaching session with me, just like, subscribe, and leave a comment down below letting me know what you think of today's video for a chance to win a free coaching session with me. I'll select 3 winners every single month. You just have to like, subscribe, and leave a comment down below for a chance to win. Now, onto the video.
Let's transition to the Snap acquisition. So 3-year run. But how did Snap get into the picture? Were they following you all along? Were there other contenders, acquiring you? Did you run a process, hire bankers? What was the experience?
Yeah, it's a great question. So they actually reached out to us pretty early on. I still remember he wasn't even one of our investors, but one of my good friends and now our investor in my new company. But Dustin at Wonder was like, hey, would you like to talk to my friend at Snap? He's interested in what you're working on. I usually don't really like to talk to people outside of the company. I find that to be distracting. I don't even know why. I was like, yeah, sure, I'll just meet Krish. And he introduced me to a couple of the BD folks at Snap. They're like, oh, it's super exciting. We want to do this too. You can build a lens within Snapchat. We have this API. I think they were trying to do like developer relations. So they were trying to get developers to build new lenses. But then like, it was kind of hard to work together with them. We were a very, very small company. We didn't have anybody to like manage this relationship. And we were just one of, I don't know, hundreds of developers that they talked to. So we were kind of going back and forth for like a while, and we ended up never doing anything together. But we at least had the relationship. And I subsequently found out that they were trying to do the exact same thing for a long time with a much bigger team. And we were way farther ahead. We had like, I think 4 researchers, and they had, I think a couple dozen. I don't know exactly how many were like dedicated to this. And I think basically they were trying to learn about us, compete with us. And it took 18 months, but eventually they actually just acquired us. So I don't know exactly what the like discussion was, but my guess is it was some version of like, hey, this team is way smaller and way ahead of us. What's going on? And then the team internally was probably like, no, we can beat them. And then they're like, okay, let's do it. And then, 12 months pass and we're even farther ahead. And they're like, okay, what's going on here? We have to pay a premium to acquire a stronger team. Anyway, that's my version. I don't know if that's actually what happened.
Did you just take the inbound offer and move forward? Did you guys bring in
No, so they tried to acquire us many, many times, and I kept saying no, and they were like, oh, what's your number and stuff like that. And I guess maybe from their perspective, I was playing hardball. From my perspective, I was like, no, I don't want to sell. It's only been 3 years. It's too soon. And at some point, their offer was okay. To be fair, to be fair, if our company was doing way better, I would have turned it down, right? Maybe it would have been worse. But it's not like our company was doing it's not like our product was killing it. So
well, it's probably good that it wasn't, because you wouldn't have sold it and the market would have tanked.
Yeah, I would have said no, and then the market would have tanked and would have had to fundraise, with like 0 or little revenue. So that's where we're like, there's just so much luck, right? And anyway, so our company wasn't like crushing it, right? And and I still remember
you
our
did play hard to get, which is something I talk to founders often. It's like, if you have the means to walk away,
oh yeah,
your valuation goes up so much.
That's a really important point. Is another thing that we do deserve some credit for is we were extremely frugal. And when we were acquired, we actually had like, I think 18 more months of runway. So we were not in any dire position at all. Right. So we had like, there was no, like we had some leverage, right? As a smaller company, you don't have that much leverage, but I had the leverage of saying, oh, I just continue operating. Right. So go ahead, keep burning whatever 50 engineers, researchers worth of, salaries to lose to us. Right.
Yeah.
I can just keep going for 12 or 18 months. I have a really small team. My burn's really low. I found that to be really, really helpful. If you have no alternatives and you're like, man, I'm going to not make payroll like next month. I mean, some people like that. Like the pressure makes you do some cool stuff, but you're not in a very good negotiating position. And whether they know it or not, they can sense that. So we always had the walk away like leverage. So, well, we don't need to sell. So I think that helped a lot.
No, that's smart. And basically, you didn't run a competitive process. You didn't bring any other parties to the table.
So
basically,
that's hotly debated. And we brought in some like M&A consultants, which I don't know if that's a good idea or not. But they felt like you need acquirers who fall in love with you. So just like going on a bunch of dates, they thought like it was a waste of time, especially they're like, you need leverage, right? But your leverage is to keep operating as an independent company. So they're like, that's leverage enough. But if you're going to go like try to talk to Facebook and Amazon and Shopify and whatever, it's going to take you a bunch of time, and then you're going to tell everybody your story, and you might piss off the one party who already loves you. So we decided not to run a process. I don't know in retrospect if that was the right, I mean, it's unknowable if that was the right call or not. But if I ran the process much more time, maybe Zerp would have ended. So.
Yeah, you would have probably killed 6 months, and then the market would have collapsed, and so it was actually probably the best advice. And
yeah, I mean, it's unknowable. Maybe that would have multiple bidders and sold for 200 million. I don't know, but we'll never know.
It never would have made money, so yeah, it wasn't a bad decision. But
I would say, even on your throwaway comment of everybody made money, not all the investors were supportive or happy about the acquisition.
Oh yeah, so. Yeah, they didn't get they didn't return the fund.
Yeah, the IRRs are great, but like, I mean, I had such a good experience with my investors, so I don't mean this negatively at all. It's just a cold hard fact that like for Founders Fund making like a 3 or 4x in like a year, the IRR is great, but like, dude, that doesn't even matter.
Yeah, it doesn't move the needle.
Yeah,
So founders don't understand that, Matt. Like the founders, like, oh, this is great, but like to investors, like sucks.
No, I totally understand, and I totally understand it. But Founders Fund was always so supportive and great. So I mean, I had such a good experience with them. I can't say that's the case with all investors, but the other thing is when I sold the company, I was like, oh man, like everybody made money, like good job, we're like lucky, and then we were a little good, a lot lucky, and then not even all of our team and the investors were like happy. I was like, man, this is crazy. It's like you do all this work. Not like I got into this for people to be like, oh, thank you, Ben, or anything, but I didn't expect like people to be like angry at me for like not making enough money. And I was like, this is crazy. Like, wow. I'm sorry you didn't make even more money. But yeah, don't get into this thinking that people are going to be like, oh, thank you so much. Like,
you're my savior. You're amazing, man.
Yeah. I don't think I don't think founders are, but I mean, I was a little bit surprised on the negative side to be like, I can't believe people are complaining to me. It's like crazy.
Yeah. I've seen that. We had a deal blow up back in my day with an acquisition because our board got agreed. Like, no, billionaire bust. We're like, that's not in the cards anymore, guys. Like, billionaire bust. I don't want to bust.
Right, yeah.
Bust sucks.
Yeah, bust sucks. Yeah.
It doesn't mean anything to you and your check, but me, it means a lot more. Right. That I totally feel you there. But speaking of the money side of things, we were talking offline a little bit about your QSBS over-acquisition. So let me just warm this up for the audience if they're not familiar. So QSBS, Qualified Small Business Stock, that's what it is.
Right.
Basically a way to get up to 10 million tax-free. And there's all kinds of like structures in the sale of your stock. If you had it for 5 years, it's a corporation, there's other criteria, but basically tax-free proceeds up to 10 mil. So walk us through what you did there and what you earned.
Right. So it's a program designed to encourage entrepreneurship, right? Which is, I think maybe not everybody supports it, but I think pretty well supported. America is very entrepreneurial. I think the idea is to encourage people to start small businesses and incentivize it, which is great. And so when we sold to Snap, I think our company was about 3.5 years old. And so for QSBS to be eligible, you have to hold for 5 years, which also makes sense. So you don't just do like a quick flip. And so we're like, okay, cool. So then it's only been 3.5 years, but you can just hold on to, because we did a stock swap. And so we're like, okay, we just hold on to Snap stock for just 18 months. And then you can sell the Snap stock or whatever, and it'll all be tax free. It's like, okay, cool. Like 18 months is not that long. I don't know, like we got paid like other money. We got paid like cash, and like we had jobs and stuff. So we're like, we're fine with money for now. The savings is pretty significant. So let's just hold on to Snap stock. Now, in that time, Jay Powell increased interest rates, as he should have probably even earlier than that. And the stock market started to tank, right? And when that happened, the smaller caps were hit harder. And I think Snap, initially it ran up like another 30 or 40%. And I was like, oh my God, this is like even better deal. And then it dropped like peak to trough. I think it's like 90-some% in terms of their share price. And it just fell like so fast that like I didn't even have time to react. I mean, I guess I did, but I did not have time to react. And basically I just rode the roller coaster all the way down. So I did, I saved money on taxes, which I succeeded in that goal. and I just lost like a way more money in the stock dropping. So I don't know exactly what the learning is here, because if the stock like went up even more, then like, man, would have been great, and I would have kicked myself for paying the taxes early. But yeah, I mean, I've tried to tell myself not to live my life doing like tax optimization, which is why I still live in California, for example. But that was like it seemed like a easy thing. I had like a 30-40% cushion on a tax basis, and then just dropped so much. So yeah, that kind of sucked. But anyway, I'm already a very lucky person in life. That part, I don't know, not the luckiest.
I guess it goes down the famous saying, like a bird in the hand. Just like if you got it, just take it and run with it. And so I probably made the exact same decision if I was.
Well, we had some birds in the hand, right? We got paid some cash upfront, and then we had RSUs that we were selling. So I mean, we're still very lucky. We still made money. But anyway, I don't know exactly what the learning is for other founders, but like we even looked into like hedging and like buying like other products or options or something, and if that gets found out, then that could be like tax evasion. There's like really strong penalties for that,
like a 2-year call option or something.
Yeah, something like that, or trying to do and so we looked into a lot of that type of stuff. Because I mean, those seemed like it was too bad if something bad happened. So we ended up doing nothing, and then it was didn't work out.
Well, that's fair. And yeah, I think it's a fascinating story. Just again, like every situation is always different with every deal. Like it's very rare that similar deals occur. Like
totally. And this is why I almost never give advice, because like I barely even understand what happened to me, and much less can I understand somebody else's situation. So I share stories like this. I love sharing stories with Jason, with you and your audience. Like, stories is great, but this is not advice. At least not for me.
Well, so the acquisition a couple of years ago, you stayed a little bit. How long did you stay at Snap?
So I was supposed to do like a 4-year vesting, but the stock dropped so much. The remainder was like not very much anyway. And the AI wave, this generation of the AI wave, which was transformer based, was so exciting. And I was working on it at Snap a little bit as well. That my co-founder and I just got the itch, and we're just like, wow, we got to jump in the water now. To the surfing analogy, we're like, well, we're kind of on this like cruise ship. I mean, Snap is not the biggest cruise ship, but it is kind of a cruise ship, and it's pretty fun. And we're like looking at a bunch of other like surfers surfing. We're like, that's pretty. We're like criticizing them, right? Like, that surfer kind of sucks. This surfer looks kind of cool, but we're just like sitting on our boat, right? So we're like, eventually we couldn't resist, and so we're like, we got to get in the water. I don't know what's going to happen. We need to feel the waves, and we need to intuit like what's direction we can go in, and at the very, very, very least, it'll be more fun. So we left after I think like 2.5 years or so at Snap.
So walk us through what you're doing now.
So we raised money saying that, hey, we're going to do something based on this new generation of AI technology, like generative AI. We do not have a specific idea we want to commit to yet. So we have multiple ideas that we're going to build, but building is much cheaper now. So we're going to build multiple products. So our first product was like AI dating app called Volar, which was a PR like darling for a while. But we built that in 2 months, and we were like just testing stuff. We actually brought in a CEO for that, one of the first PMs of Tinder, to be the CEO. And we basically gave him almost all the equity. But then he ended up deciding he didn't want to be a founder, which another lesson is like, you can never convince somebody to be a founder. So we ended up having to shut that down, which is fine. And we also built a second story called Voice Story, which was much more personal. It was like a voice journal. So I'm a journaler. Like most people, probably journal way less than I would like. And the idea was I could just like talk to this journal that it would be purpose built for journaling purposes, and it would like encapsulate every story with like an image and like a summary, etc., and that you could like talk to. And so that was a very cool product that I really liked. And then we had a small number of users who really, really liked it as well. And we ran into the same problem that, frankly, every product runs into, or service, is how do you get distribution and like marketing. And I think that's like the hardest part in the, in this AI world where there's just like so much content out there, is how do you break through? And so we're like, We tried like influencers and ads. Those worked as expected. There was not really any alpha there. So we had this thought, like many founders probably do, which is let's control our own destiny and build our own TikTok channels so that we can reach our audience directly. And let's tell the stories of like our top users of how they're using Voice Story, and like, maybe it can be relatable to other people, etc. And that kind of worked, right? So we started doing that, and then it was working. And then we actually realized the TikTok videos started doing really, really well. And like every day we're like, oh, what about this TikTok channel? And what about this other one? And then we just kept doing them. And, one thing led to another. And at this point, I think we've launched like 300 channels. I think we actively operate something like 50 channels. We posted like 15,000 videos. We've done like, I think 200 million total views. I think like 65 million in the last week. So that gives you a sense, like a third of them are in the last week. So the growth is like exponential. Like there's going to be some ceiling on this. Like I'm not expecting this to continue going exponential forever. Doesn't feel like the ceiling is very close. So everything we do is like AI generated. And there's a lot of like terrible stuff that's AI generated. No stuff is actually pretty hard to do. But there are certain pockets that are like pretty high quality and good enough. And I think over time, there'll be more and more types of videos that are better. But yeah, so yeah, our whole thing is like scalable content that is good enough quality to meet the demand.
So I want to take a step back. After you left Snap, you and your co-founder basically were like, we're going to do something in AI. And you mentioned very quietly that you raised money. Can you talk about that? Like you raised money. It was basically just a team only. And
So Dustin at Wonder was the guy who introduced me to Krish at Snap. So he was the guy who initially connected me to eventually the company that acquired us. He was also an advisor to my company. He had done like a kind of a fashion startup long time before Forma, actually. So he had some learnings for us. I just liked Dustin. I was an investor in his fund as well. So anyway, we also had a relationship built over time. And he was like, every month while at Snap is like, well, anytime you leave, I got a check for you. So I really appreciated that. And as part of fundraising, I think most founders know getting that first check in is like the most critical. You need to have somebody, investors are herd animals for good reason, or most are herd animals for good reason. So once you have like someone who's willing to take a bet on you, it's much, much easier to get all the other investors on board. So I always really appreciated that from Dustin. And so I took his money. I didn't go around and fundraise. I brought in like, I think everybody in this company was an investor or at least a shareholder in my first company. I guess except like some Snap people. I guess they weren't shareholders, but they were all just kind of like friendlies. So I mean, that's one of the benefits of being a repeat founder is you have made money for some people. So I didn't really have to go out and fundraise. But now I'm like, since then I've had to go out and fundraise and gone through the painful process of doing roadshows and getting turned down by pretty much everybody.
Well, let's talk about that. So how much did you raise off the get-go? And then what's kind of been the recent story?
We've raised a little over 2 million. And the idea was, I actually had an offer for like 10 million right off the bat. I felt like with AI, we didn't need to have too much money, and inevitably, if you have a lot of money, you'll spend it. And we're like insanely frugal. I still remember my VC in my last company was like, "You're the most frugal CEO in my entire portfolio." I was like, "Is that a compliment or criticism?" Anyway, but either way, I was like, "I don't need the dilution. I don't want to we don't even have the idea yet. This feels like beyond what we need." And it was also a new VC that I didn't know very well. So anyway. We were like, look, we only need a couple $1 million. Founders won't take salary. And then we only need like 2 or 3 other employees that we already know very well. I mean, our whole team is like from our first company and Snap. And so we didn't need to raise a lot of money. I think there's pros and cons of that. So I think the pros is like, we've been very, very, very capital efficient. We have not overhired. We've been forced to make difficult decisions like shutting down products that we should. I don't think that there's anything that we wanted to do that we couldn't do. So I don't think we're like undercapitalized. But I mean, we still are feeling the heat, right? Like you have like a year's worth of runway left. And you start to be like, okay, I kind of need to raise money soonish, right? Maybe not like today, but in the next 6 months, you probably want to raise money. So the way I like raise money now is I try to like talk to investors and ask them for intros and advice. And then hopefully one of them is like, well, this is so exciting that I want to lead your round of financing. I would say now there's certain pockets of startups that are very easy to raise money. I think consumer is very hard. And so like not only do you need to have traction, you need to have like real revenues. And so that's very different than with my last company, and certainly since like kind of the Web 2.0 era where, you just get eyeballs first and then worry about money later. And the reality is there are so many startups that have really real revenues that like if I were an investor, I would also be like, well, I'm looking at companies with 10 million revenue like every day. Like why would I invest in your company that looks cool but like has literally zero revenue? I'm just gonna go do the other company that has 10 million revenue. So it is it's a little bit harder.
It's perspective. Like so many founders don't realize it's like it's not that you're a bad investment. It's just there's better investments.
Yeah, or perceived to be. It's not. We don't know if it's better, but it's perceived to be.
Perceived to be. It's an easier, safer bet to go with the company that has more traction or whatever the criteria might be. And just so many founders just don't know what's happening on the other side. They've never been an investor. They don't really know how much deal flow is. They see 150 deals a month. Like, and you're just one of those. So you have to be the best of the 150.
Yeah.
To get a check in some cases.
Right. I don't know how much you want to get into like the VC inside baseball stuff. I mean, I don't know how interesting that is, but there's a lot of weird stuff going on that everybody is acting, at least in their minds, rationally. Let's put it that way. So to your mind, maybe like you're like, oh, why are they doing this other stupid company? But there is some reason, right?
I want to know. Yeah. What's your inside baseball look?
I just think like VCs, like most people or people who work, their number one priority for almost all VCs is to keep their job. Right. And now making money is a way to keep your job, but like making money is hard, right? So it's easier for most people just to follow what other investors and like smart investors are investing in. Investors don't know either, right? Like Keith is one of the best investors of all time, and he would say all the time, like, I don't know, right? He would say like, this is my opinion, but you should decide. I'm not on the ground. I'm not in the arena. He would say that all the time, and this guy is one of the best investors of all time, right? So like investors don't know, right? They also don't know. So what are they doing? They're using heuristics. They're looking at trends. They're like trying to assess the founder quality. But anyway, like I think the VCs, like they're a lot of them are in the AUM game, right? Because they get guaranteed fees for raising more money. So what do you want to do? You want to invest $1 billion in OpenAI or whatever, Johnny Ive's like IO startup or whatever, because you can deploy $1 billion at a time. You collect 2 and 20 or whatever. You get 2% guaranteed, right, from your LPs, and then you get the upside of 20% if you make money. So everybody's trying to kill themselves trying to get into OpenAI and like SpaceX and whatever these like big companies are. And then there's very few who want to like take a risk on a smaller company. And now like the reality is there hasn't been that much money made in consumer in the last like 10 years or so. Like TikTok is probably the last big one. That's not even a US company. So there's just not that much money, right? And so like, can you make money? Like as a founder, I don't feel like there's any reason why consumer. Well, there are reasons. Like distribution is pretty hard, but I still feel like consumers still can produce big outcomes. But from an investor's perspective, in the last 10 years, they haven't made much money, and a bunch of people made money in SaaS. So guess what? They're probably going to deploy a lot more money in like enterprise SaaS stuff. So anyway, I can go on forever about this, but I mean, for me, it's like I want to work on things that when I wake up, I feel excited to do it. Nothing personally against SaaS or anything else, but like I don't find that to be very fun for myself, and I feel like life is short. So like consumer to me is fun, and then hopefully I actually think that actually increases the likelihood of us making money is if we're having fun, then we're gonna be more motivated to work, and we're gonna be able to find interesting things that other people who don't think it's as fun might not be able to find. Whereas if I try to do SaaS, I don't find it that fun. What are the chances that I'm going to just like outcompete another person who actually really enjoys SaaS? Like I'm probably not going to be able to beat them. So
well, it's one of the most important things. I have conversations with founders all the time. It's like, what do you really want as a founder? And like, so many people, don't recognize that key motivation factor of like, what actually brings you joy to go out and hustle and basically suffer every day.
Right.
You got to have that.
And keep going.
I mean,
Yeah. So, it's very hard, right? So, and I think it's, just in general too, right? Not just for founders. I think in the world now, we're moving somewhere in the spectrum from scarcity over to abundance in general. Obviously, there's many examples of scarcity, but when we start moving towards abundance, knowing what you want becomes the hardest part, right? And that's why everybody's just scrolling Instagram, because I don't know what I want. Instagram does a pretty good job just like showing me stuff I kind of like. I do it too, right? Because trying to figure out what you want is where you. Sorry.
I had to delete Instagram because it's too good.
No, it's crazy. It's because it's so easy. It's like, do I sit here and try to think really hard what I want and take accountability for wanting it, or do I just like go through this Instagram feed, which is like pretty good, right? Or TikTok, right? And 99 times out of 100, it's easier just to go, flip through something. So, yeah, I think that's a hard question to answer for everybody. But if you can find out what you want, I think that's a superpower, because you're going to do it for longer. It's not original. A lot of people have talked about this, right? But you're going to be able to go for longer than other people who don't have as much fun doing it. And in the game of startups, I think survival is like number one, right? You got to survive. You got to keep going. And if you're having fun, then even better, right? Because then you're able to play around. And that's where actually a lot of the interesting things come about, is when you mess around and do something that may seem silly or whimsical to others, but you like take it seriously and have fun doing it. I think that actually increases the likelihood of you actually having the outcome that you want. So
that's
what we're trying to do for ourselves.
That perspective. And just for to wrap things up here, what would be the kind of parting advice to founders out there that are, let's say, in consumer, to be specific, looking to raise capital?
Figure out distribution. No, I mean, everybody knows that. I don't like to give advice, but one thing that I think is pretty universal is think about what you want and enjoy doing. And if you're able to find that and stick to it, I think any outcome will be fine. Like, I actually think you're more likely.
I always like to preface that with like, have realistic expectations. Don't always shoot for the $1 billion outcome and that. You can have millions. You can have good outcome, but
right. But right. I would say if the thing that you want is to have $1 billion company, I don't know. I think it's like pretty hard to. I think that's too hard to want, because there's too many factors that factor into it. I think like, think about what you want to do every day, and that way, if your company becomes $1 billion, that's great. In fact, I think it's more likely that your company will become $1 billion. But even if your company doesn't become $1 billion and becomes 100 million or 10 million or just completely fails, personally, I would say I'm not going to regret that. If like every day I woke up and had a good time for 5 years, and let's say I was unlucky or I was not very good and the whole thing just like crashed and cratered to zero, but I worked really hard and had a fun time doing it, I don't think I'd regret it. And if you flip it around and be like, I chased what I thought was $1 billion opportunity, but every day I woke up and I hated my life, I think even if I got there, I'd be like, wait, now I have a $1 billion company and I've hated my last 5 years of my life is short, right? I don't want to hate my life for 5 years. And then most likely you're not going to make it. You're not going to make it. And so you're going to hate your life, and your company's probably going to be dead because you hated your life. That just seems like a miserable way to live. So that's all I would say.
No, it's impressive. So I guess from here, what it would be very interesting for the audience, because you just kind of dropped a very interesting note that you got to 65 million views. You're pumping out AI video content that's like in that, Goldilocks stage of efficient with AI. It's still good. What's the URL? Like, what's the
oh man, I'm not trying to be dodgy. I don't know how to say that. I have like 50. I actually have 300 channels. I have 50 of them that I'm operating. So there's no one centralized thing. And it's very foreign to me as well. It's like confusing to me. Like, how do I describe this to other people? How do I even like get people to support me? I don't even know how to do that. So, I'm like actually not trying to dodge your question. This is actually a problem that we have, is how do we get people to watch our videos more? The answer is I don't know. I'm working on it.
We did catch you in the upswing. It's been 1 week and you exploded with growth. So, won't put you in the hot seat yet. But if we do figure out a way to share a link between this recording and the posting, we'll put in the description for people to check out and reverse engineer how you figured this out.
I appreciate that. Maybe I'll give you a couple of our bigger channels that people can just look at, and then you can, when you see it, you'll be like, "This is crazy," but then look at the view count and look at the metrics. Like, it's 100% genuine, no purchased likes or views or anything, and it's ongoing. It's not like we're not just doing like one-off. Of course, we love viral hits, of course, like anybody else. But our whole goal is to have like ongoing channels and IP and characters that people like. So I can share some of those links later.
I'd be personally interested in checking that out as well. So maybe after the call, you can shoot those over. But then, and what would be the best way for someone to learn more about you? Would it be like LinkedIn, email?
I guess LinkedIn. I guess I'm not very public out there. And that's intentional. I feel like I don't like to give advice. I don't, because I don't know anything. So yeah, I guess LinkedIn would probably be the best way. I mean, I guess I exist on Twitter as well, but I'm not very active. But if somebody like finds somebody to introduce me to them, I'm generally pretty open to meet founders. I love encouraging founders. I don't like to give advice, but I love to encourage founders, tell them to keep going, try to help them find joy and things that help them keep going. I think that's like the biggest thing that I can do. If I can pass on like a tiny little bit to other founders is, help them find a little joy in what they're doing. That would be, that's what I've always appreciated from other founders. So if I can do that, that would be great.
Well, I appreciate all the guys, the stories, and for coming on the show, Ben, and look forward to getting this out to our audience.
Awesome. Thanks, Jason.
Thank you for watching today's episode. As a reminder, I'm your host, Jason Kirby. I have built and sold multiple companies with over 135 million in transactions as either a founder, operator, or investor across multiple industries. I'm currently the managing director and founder of Thunder.vc, where we help companies and founders at all stages navigate what capital to raise and who to raise it from, and help improve companies' odds of raising capital. If you need help, reach out to us at help.thunder.vc. If you like today's show, please share with your friends, give us a like or a comment down below. And as a reminder, this show is published weekly. And to get notified of new episodes and our newsletter, be sure to go to our website at join.thunder.vc. And if you sign up today, I'll send you a few freebies on how to negotiate a term sheet, how to get a free list of relevant VCs, and much more. That's it. No more shameless plugs. Thank you, and see you next week.